there, I'm advocate Carien van Dijk and I'm one of the directors of the Supremacy Group. And today I'm going to present to you a slideshow on Am I Paying Too Much Tax? And we're really going to go into a lot of detail to discuss certain common tax pitfalls that businesses face, certain things that they might be doing that is actually resulting in them paying too much tax or not effectively structuring the tax. But first of all, we're going to just go over and I'm going to introduce myself a bit to you more. And then I'm also going to go over after that and introduce our company, the Supremacy Group. And then we're going to start with what you are here for. We're going to start talking about tax. And I promise you, I will do my utmost best to keep it light and informed, to give you as much as possible practical insights so that you don't fall asleep, so that you don't think it's too boring. But I really want to tell you what to do as practically as possible to really effectively manage your business and to really ensure that you are not paying too much tax. As we always say in the industry, we want to pay SARS every cent that they are due, but not a single cent more. So that is what we're actually going to focus on today. So with that in mind, my first slide is I just want to really introduce myself to you as I want to make sure that you understand where I come from and why I'm sitting in front of you today. So as mentioned, I'm advocate Carien van Dijk. So I'm actually a tax specialized advocate of the High Court. So what that means is that I do normal tax services and tax compliance for companies and individuals. But when any of the tax disputes or any tax queries goes a bit further with SARS, I'm also more than enough equipped to actually take it further and to fight the good fight on your behalf. I'm also a master tax practitioner as registered with SARS in my professional body. And what that means is that I'm actually a master in terms of having a master's degree in taxation, and also that I've been in a senior position for taxation for more than 10 years. So those are the requirements that enables you to have this title, and it also allows me to get a bit more preferential treatment when dealing with SARS on your behalf. So it's quite good having that. I obtained my LLB and LLM at the University of Victoria. And yeah, you might ask, why does a person with a law degree actually do in tax? Now, tax, although the outcome might be a number and there might be some calculations involved, in order to determine that number, we have to actually look at a very thick piece of legislation. And that is usually where a lot of people get it wrong because they only look at the figure and they don't understand the legislation and all the requirements that it entails. So that's why we have mostly law professionals looking at taxation, structuring it correctly to ensure that the amount in the end is effective. Because the calculation of tax is actually the easy part. It is getting to know what has to go in and what not, where the hard work actually sits at and where you need the specialization. Now, I'm also a part-time tax lecturer, and then also I started my tax journey at PricewaterhouseCoopers, and after that I joined First Rand Bank, where I was the senior pay-as-you-earn tax administration at law and compliance specialist for the whole of Africa and South Africa. So that includes FNB, West Bank, etc. And after that, I met up with a wonderful person. She's an ex-SARS auditor, and she also worked at First Rand. She was quite senior there, and we decided to start our own business, hence the Supremacy Group. Now, just something we are very humbled about, and that my business partner always tells me that I have to inform everyone about, is the Supremacy Group has since it opened its stores, won many business awards and accolades. And also recently, I've been humbled by winning the award for the FNB Rocky Businesswoman of the Year for 2018 and 19. And the reason why Business Women of the Year, because although we help other businesses with tax, payroll, accounting, company secretarial, HR, etc., we also started our own business. And we started it around the dining room table. So we know exactly what you feel when you start a business. We've been there. We are going through all the statistical ups and downs, and we really know what it takes and the hustle and the hours and everything. So that's why we feel that we're in a really good position to really understand people and their queries and to really help. Not just telling them what a textbook says or telling them what theory says, because theory and textbook knowledge is only good up until a certain point. You have to practically know how to apply something. And you also have to practically know when something is applicable to you and when not. So you'll also see in my presentation today that I'm really going to be as practical as possible. I think this is going to be my word for the day, because in the end, this is what you need. You need to know practically what to do and what not to do. Not just theory, but to know exactly what is the best. Okay, so in my next slide, before I start talking about tax, it's just a short video and an introduction of the Supremacy Group so that you can just know a bit more about us.
The Supremacy Group started 3.5 years ago around the dining room table. Carien and I have this passion of helping small businesses get off the ground. We know what it takes to start a new company. We know that you have to register and get rolling from the time that you choose a name for your business. So we have that passion to do the admin for any business that starts up so that they can focus on the passion that they have for running their business.
What makes our company and the services we render different is the fact that, number one, we have an extreme amount of experience. Our combined experience in a company for tax, payroll, accounting services is over 100 years. We don't just do the service and give your company a pay slip. We actually go a bit further in guiding you on the best structures for your pay slips and for the tax on it. With accounting, we don't just do the accounting, we will actually guide you, tell you what we think you need to do to have optimal tax in your business, to have optimal expenses and income. And that's where our uniqueness just stretches further than we can actually really kind of propose or experience or tell people about. But what we do is all fees grows with your business. So what makes that such a unique thing? As your business grows, all fee grows with you. As your business has a bad month, we feel that bad month with you, with our fee going down.
By helping you register your business, then we grow with you as your partner. We go into payroll because if you're alone in the company, you still have to pay yourself. So you need a payroll. You need accounting services. You need tax services. You need to market your business. And you need training. And at the Supremacy Group, we offer all of that to help you grow your business.
From the 1st of June 2018, we actually launched an online training center, first of its kind of Africa. We partnered with the National Small Business Chambers, and with that, we are able to provide any small business owners or actually anyone just who wants to know more about how to do their own accounting, how to do their own tax, how to do their own payroll for the business. Essentially saving them thousands so that they don't have to outsource. And that is actually what makes us the Supremacy Group. We are not just simply supreme in the services that we outsource for you. We are supreme in the services that we teach you how to do, to empower you to do it. And that is the Supremacy Group. So as you can see, the Supremacy Group, we have a real passion, and that's also part of our slogan is our passion is to help you focus on your passion. This business started as a very passionate business in a sense of that Penny and myself, as we worked together in First Rand, every morning we would get each other at the coffee station and we'll just talk about tax and payroll and accounting, and everyone then started wondering, don't we have anything else to talk about? But when you do what you are passionate about, and as bizarre as it might seem, we are passionate about this, it becomes you and it becomes an extension of you, and that is what we actually do. Now, just to kind of embrace that and to also tell you how you must also embrace that. You as an entrepreneur, and sometimes you might not think you're an entrepreneur, but you might think it was just a normal step you have to take when you finalize your studies at the university. You have to start your own place. But what you don't know is that you're actually an entrepreneur and you are really one of those people that helps the economy grow. And sometimes it's quite a hard task, and sometimes we don't realize it. We just keep our head down and do what we need to do. But if you sit back and just look at what you accomplished thus far, this quote is also something that I just want to share with you because I feel that it really resonates, and sometimes we don't always see what we have done and where we are already, because we need to look at where we are and what we've done to know where we have to go and where we want to go. Now, just to share the quote with you, entrepreneurship is living a few years of your life like most people won't, so that you can spend the rest of your life like most people can't. Might not always feel like it, especially if you struggle to manage cash flow, etc. But you know as well as I do, in the end, it is really all worth it. It's just now to find out how to tweak things and how to keep the admin in place in such a way that we know exactly how to manage it effectively. We know you have the passion to do it, but now it's just about the effectiveness that we have to bring in and combine with that passion. And now let's start with the first official slide of, am I paying too much tax? Now, I'm first going to discuss some common tax pitfalls for businesses. So we deal with hundreds and hundreds of businesses of various sizes. We have lots of small businesses, we have lots of sole proprietors, and then we have a lot of big corporate companies and international companies as well. So we really do see everything. And one of the four top things that we have seen that I want to share with you today, because I'm not going to be one of those guys that sits here and tells you about all the statistics and why businesses fail. We have enough to worry about on a daily basis. I don't want us to worry about that. But I want us to rather focus on why those statistics are there. Um, it's fine to say that every one out of X amount of businesses fail every X years, but why do they fail? And what can we learn from it? And how can we avoid that? It's one thing to see something happen, but it's another thing to learn from it. As someone told me once, there's no such thing as failure. You either learn from it or you succeed. And if you don't learn, then that's the actual failing because you have to learn from what went wrong. Now, the first thing I want to chat about, and you'll see I'm going to deal with each one of these in much more detail, telling you how this comes about and how to actually avoid it. But I just want to give you a bit of an oversight into it. Now, the first thing is the mixing of personal and business accounts. We see this issue time and time again. Whether it has been a business established for 20 years or whether it is a new business, sometimes they mix up because simply because they don't understand that a business is separate from them as a person. When you start your own business, let's say for example you start your own vet, the problem with that is you as the vet mainly become the business itself. Even if you have another name, like I Love Dogs, Pty Ltd, whatever the case may be, sorry, I'm not against the cats or anything else, but if you start your vet business, you as the actual main vet, or you as the owner, you are actually the one that clients comes to. You are the one that they deal with. And essentially, that's also how we see business ourselves, is we see it as it's my business. So when money comes into the business, we simply take it out. But that's not how it works. The moment you have a business, you have to make a clear distinction between personal and business accounts. If we look at an account and we can't see a clear distinction, neither will SaaS. And that's the big issue because SaaS wants clarity. If SaaS is not able to see a clear distinction between personal and business transactions, then they assume that everything is personal and then they tax it. That's one of the biggest risks that businesses face. And one of the biggest things to struggle with also on a monthly basis. And also, if you look at it from a different perspective, how can you effectively run your business and know exactly what happens to every cent in your business if you don't even have a distinction between personal and business upfront? So that's one of the biggest things that we will discuss in a bit more detail. Then lack of expense record keeping. So for example, this is usually where we have a bit of a chuckle. We usually get a different array of clients. You get some clients that really likes technology, utilizes it a lot. You get other people that don't want to learn new technology. They don't have time for it, and they just put everything in a shoebox. And then you have the type of person that doesn't have time for anything at all and they don't keep any slips. They just keep going because of the fact that they have a passion for what they do and the rest, unfortunately, does fall behind a bit. We're going to discuss how to practically go about, and also what I just want to mention now is that what we have to remember is the moment we start a business, yes, we have a passion for what we do. That's why we ultimately start a business. It's not like you really start a business and you just choose something just because. Even if you start a business out of necessity in order to get extra revenue or whatever the case may be, there's still a reason why you chose that specific service or product. There's a reason behind everything. You won't go and start a plumbing business just because you have bought a mixer the one day and now you think you can do it. You start something and there's more to it than just the actual money behind it. And because of that reason, because we have, even if it's a small and we don't realize it, because we have that passion that initially ignited us starting the business, we tend to focus only on that passion. And as I might have mentioned earlier, the problem is when we have that passion about what we do and the service we deliver or the product that we provide, we tend to focus solely on that passion. And when you have a business, the passion itself, in terms of the service or product, is not the only thing that will keep a business going. And that is what a lot of entrepreneurs and business owners forget. When you have a passion, for example, we can take any type of business. Let's take something as stupid as Seattle Coffee. If Seattle Coffee only focused on the amazing coffee that they make, but they didn't focus on having a till there, or they didn't focus on declaring anything, all of their income to source, or they didn't focus on logistics like buying the milk or anything like that, their service rating is going to go down because people are going to be dissatisfied. So although they have the passion and their focus is solely on giving that passion towards their clients, you still need so many things to actually support that passion. And that is part of managing a business. So even if you as a person feel that you're not a finance person, you feel that numbers are not your thing, you still have to have adherence for it. You still have to understand it to a certain degree, and you still have to then either do it yourself or get someone in your corner that knows how to do it, because essentially it is still a necessity of your business, even if it's not part of the core that you are delivering. The next thing I want to discuss is financial and business structuring. Sometimes we tend to kind of loop just to get the easiest way to deal with something. We see this quite a lot as well. Is we have businesses, and then after 4 or 5 years, for some reason, that's usually the bench. Every 4 or 5 years, or every 8 and 9 years, for some reason, businesses come to us and they say, "Ooh, they don't know." They use their uncles, daughters, cousins, brother, or whatever the case may be. And unfortunately, this person never did anything, or they used the friends. Now, I'm very pro using any friends or any family, because I believe that they do extra effort. It depends also on who you use. But the thing is, you cannot just hand something over to someone and wash your hands with it. You still have to understand, and you still have to follow up. You are still responsible, because in the end, what do you want to achieve with a business? Yes, you want to do what is your passion, but ultimately you want to survive financially as well. You want to be financially independent. That is why you actually sometimes run your own business, is for that financial gain in the end. Now, why would you take something that you work day and night for and hand over the most important part of that business to someone without checking what's going on? It's the same, for example, when you go to, let's say, a bank, and every month you just hand over your money to them and you tell them, invest the money how you want to, spend the money on my behalf how you want to, it doesn't matter, because that's exactly what you do. You're giving over the heart of operations of your business to someone else, which is not a problem, but you are not managing and ensuring that the person that you handed it over is actually doing what they should do. Doesn't mean that you have to get a degree or have to understand every technical thing that they do, but it doesn't mean that you have to know what to ask for and what to check on a monthly or biannual or annual basis. It is still your business. Don't just hand it over and then regret it in the end and having to deal with issues and face closure of your business because of that. It's not worth it. And then, in conjunction with what I just said, I'm going to chat a bit about understanding tax principles, just to give you some practicality about what to look for, whether you do it yourself, whether you outsource, whatever the case may be, just to give you some practical guidelines on what to look for. Now, you might ask, how does this all tie in with the actual theme of the presentation? Am I paying too much tax? Well, you'll see as we continue, because there's no hard and fast rule to actually say, yes, you are paying too much tax, or no, you are not. As with our fingerprints, every business in itself is also completely unique. Even if you all have big businesses, the way you run it is unique because you are unique. So a business is essentially an extension of you as the business owner. And therefore, no business is the same. How things run, how things are managed, even if you have a copy and paste directly of someone else's business processes, it will still be different in the end. And that is why there's no yes or no answer, but we're going to discuss about what most do on average. And I'm sure some of it will relate to you, or you might learn something that you didn't know you want to look into a bit more to ensure that it doesn't happen, because that's essentially what we're then going to understand in terms of, am I paying too much tax or not? Am I actually effectively managing? Am I managing it at all or not? Do I need to get help in? Can I manage this on my own? So hopefully those are some of the questions we will be able to answer today. Now, starting with my first tip, split account. So as I mentioned, we have a account split that is quite important. I mentioned earlier that a lot of businesses start off or they continue for over 20 years and they never really distinguish between personal and business expenses. We've picked up so many times that businesses sit with one account. For example, it can be the individual owner's bank account, and they just continue to actually pay all the transactions, they issue all the invoices still in that account. Now, the question that many ask me if I tell them you have to separate personal from business is whether they should open a separate business account or not. The answer is quite simple, yes. But the terms is where it can actually be a bit more lenient. When I say yes, open a business account, I do not mean you have to go to your bank and ask specifically for a business account. A business account means any separate account that is simply separated and not part and parcel of your personal transactions. So that means you can have two savings accounts. You can have a personal savings account, you can have a business savings account. Don't simply take a business account just because it has the word business account as the name of it. Sometimes business accounts have a much higher bank fee. And remember now, you might think, what is 50 Rand a month? 50 Rand a month is what we call critical mass. When you add it up, and remember, it's 50 Rand a month, but it's not always fixed. It depends on your amount of transaction. One month you can have a lot more transactions and it will actually go up to 400 or 500 Rand. And at the end of the year, you look at where each and every cent went, and you will see that you actually lost for a year over 5,000 or 6,000 Rand, and that due to bank fees, which is actually quite unnecessary if you think about it, especially when you have a business that takes in card transactions. Don't just choose any card facility machine just because it's the only one I know. That each and every cent and rand that gets deducted from every transaction is one less rand or cent in your pocket. And in the end, everything adds up. And all of that could have actually gone into a new machine, or it could have gone into an upgrade of something, or it could actually have gone into a nice December bonus. So don't underestimate critical mass, because if we underestimate the value of every rand, then banks would have never made money. Because banks, if they, for example, have, and if you quickly calculate it on your own, just to show you the impact of critical mass, if they have, let's say, 3 million clients, and they simply charge each one of those 3 million clients 5 Rand per month, and we time that by 12 months, then the bank will actually make 180 million Rand. That is critical mass. Don't underestimate that. Okay, so the nature of your business determines allowable tax deduction. So that's now the next portion I want to chat about. Now, why is it important for you to have a distinction between personal and business? Not only because of the fact that this is what SARS wants to see when they do a verification or audit, because obviously if there's something personal in them, personal equals tax. Whether it's going to be taxed in the company or not, or whether you're going to have to establish a payroll and it will be taxed in your individual name. You also have to take into account that the tax a business has to pay higher. Now, what do I mean with that? So let's say, for example, you have a vet business, but at the same time, you also have a doggy parlor that you've opened up on the side. And you mix both of those services together, and both of the money and activities and transactions goes into one account. The problem is when SARS doesn't audit and when SARS looks at your calculation for tax that you declare to them, they will actually ask the question, what is the nature of your business? If you tell them the nature of your business is purely being a vet, then they will disregard all of the expenses for tax purposes that you incurred for the doggy parlor. Because you are only allowed to claim expenses that relates to the nature of your business. That is why we usually advise that if you have more than one nature of business, to split those companies up simply because of this reason, so that it doesn't impact your tax calculation and that SARS doesn't withdraw everything. And if I say SARS withdraws everything, it doesn't necessarily happen as and when you submit your tax return. SARS can go back 5 years. SARS can step in today and ask you for information 5 years ago and then ask you to pay back what was owed 5 years ago if they don't agree with what you submitted. But that's not the biggest problem, although it's the big problem. The biggest problem is the fact that SARS will actually levy interest and penalties on that amount historically. So how that works is SARS can submit a penalty because you submitted incorrect information to them. The penalty can raise anything from 10% to 200% on the new tax amount that you owe. And then SARS will raise interest on that tax amount that you owe up until 10.25%. Sometimes it goes up, sometimes it goes down. But that interest amount is what we call accumulated. So that means, let's say in the first month, with the penalty amount, you owe 10,000 Rand. In that month, SARS levies 10.25% interest. The next month, SARS takes the actual amount, the 10,000, plus the interest amount, and recalculates the new month's interest on the higher amount, including your previous month's interest. That is what we call accumulated. So usually what it comes down to is, in the end, your interest, because they go back 5 years and raise it for every month that you had to use up the money. And in the end, the interest amount is usually much higher than the actual initial tax amount that you owed. And in the end, that is what breaks businesses. That is what breaks them either temporarily, or that is what breaks them permanently and they close their doors. And if I say this, I'm not saying it lightly. We see it on an actual daily basis. We have seen big companies close. You have seen it in the newspapers, big companies not being viable in South Africa anymore. And sometimes if you dig deeper to understand, it comes down to not just the fact that the tax or something like that was wrong, but overall mismanagement. For example, some of the big brands, the Starbucks or the Dunkin' Donuts, etc., as you know in the news, they pull out of South Africa, and doesn't mean that the product that they deliver or the service they deliver is not excellent. It simply means that it was something else. And that's what people underestimate, that sometimes the management of something is what is the downfall of a business. Sometimes you must sit back in a cash flow issue and wonder, but I'm doing everything. Why on earth would it not work out? I'm performing at my best. I'm working long hours. I'm giving this amazing product that no one else is giving. But in the end, it's the management behind it. As I said earlier, you are an extension, or your business is an extension of you. So if something is going wrong in your business, for example, your finances are not managed, it means that you have a block against finances. So in order to manage it correctly, you have to change your perception about it. You don't have to be a math technician or a tax practitioner in order to know the basics. Because if you know the basics, you know who to get to help you with it. Same with myself. I might know the basics of looking after my dog, but when my dog is sick, I go to a specialist. The exact same applies. Now, you might see my little picture in here with the canvas and with the artist. It's just to show you that, for example, I usually use be a plumber, but you love painting. Plumbing and painting isn't the same nature of business, and it comes down to the fact that you have to determine what is the nature of your business and you have to split it. So that's essentially one of the biggest ways that you can actually save, because saving doesn't necessarily mean just saving now. Saving also means mitigating possible risks and saving your business for the future. We cannot run a business solely focusing on today only. We have to plan ahead. We have to know that everything we do today will have an effect on our business in the future. So if we have a risk today and we do not manage it, it will become an actual problem in the future. And it might be such a problem that it can actually affect our livelihoods and everyone that works for us. So also splitting the personal from the business will help you to optimize what you can claim for tax. So as I mentioned earlier, you cannot really know what you can deduct for tax if you don't have an idea of all your transactions. If you look at your bank statements and you've spent money and you have no idea what it was for, then you actually have a problem in terms of tax. It doesn't mean you have to know everything. If you employ someone, they at least have to know what every transaction is for. Because if you don't know what that transaction is for, you can't deduct it. Then you can't reduce your tax. And then you are paying too much tax to source. So that is in itself ineffective and doesn't make any sense. Okay, so now going on to the next. My tip 2 is keeping track of expenses. Now, this is the most important one because this is essentially not just a legal requirement according to the Income Tax and the Tax Administration Act, and obviously if you have a registered company, the Companies Act, but this is also where we actually are able to understand our business and where we are able to claim all our expenses. So you would think that, it's easy, I have a bank account, I don't have to worry about it, everything is on the bank statement, I'm hunky-dory. Now here's the bad part. If everything is on your bank statement and you don't have slips as proof, have a transaction on your bank statement, I don't know about you, but for some reason we have lots of those, and the reference number simply states A0225HA, and then you look at it even a week after. It doesn't even have to be a month. A week after, and you're like, what on earth is this for? So that is the problem, because if you don't know what it's for, SARS doesn't know what it's for. And if you don't know what it's for, you don't know how to allocate it in your bookkeeping, and essentially you won't be able to deduct it from tax. So that is actually one of the big reasons why companies and businesses are paying too much tax to SARS, simply because your bank statement is not sufficient enough. You have to capture your expenses, so you have to capture a slip. Now, obviously, if you're like me, keeping your slips is not the best way. So, for example, at one stage, I was driving my car and I had this middleman that lifts up, and I thought, oh, well, let me put my slips in there. And then you forget about it, you go to the car wash, they take all your slips out, or you forget about it, you just, want to clean up and you take it all out. It's not effective at all. Now, obviously, we are, going into the fourth industrial revolution, which if you have or might have read already about, it means that we are going towards an era of technology, an era where we don't have to struggle with papers anymore. And the nice thing about all of this is the fact that sources hopefully, but for now they are at least, moving into that era with us. So they are pro technology. So the nice thing is you can actually download an app. So for example, all our clients get our free expense app, but you can also go and download it. Unfortunately, not full apps that you're able to download, but it gets most of the job done. You can actually download apps. For example, one of the apps names that I can think about now is Expensify, and that app is for free, but it's only a light version that is for free. And as you sit and as you have that expense, or as you have someone that does your invoices or accounts for you, as they have the expense or the invoice, and if the invoice that they pay was provided to them physically or manually and not via email or via the accounting system, they can actually simply take a photo of the invoice. It will link with whatever accounting system you're using, and you can actually then, after you link it, you can state what this was for. So it will have what we call your chart of accounts. That means your list of expenses. So you can directly link it to a list of expense. And for example, with our app, we go a bit further. And with our app, it actually links to the specific transaction in the bank statement, which is amazing. And that means that when SARS ever steps in for an audit, or whatever the case may be, when you have to calculate your tax you have to pay to SARS, or someone calculates it on your behalf, when SARS does a verification or a check, you have everything that you need, and you will succeed in any audit or verification that SARS does. Furthermore, you have optimized the amount of tax payable, meaning you didn't miss out on certain deductions simply because you forgot about them. The nice thing about the apps also is that you can actually take photos and you can backdate the dates on the actual. So you can take an admin day. For some odd reason, I use Mondays as my admin days, although it's the busiest days. It's also my most productive days, and therefore I have the most strength to do admin that I need to do. So you can take whatever day is possible for you. Just take a half an hour of the day, or have the person that needs to do it and let them do it. And you literally take photos of the slips, and you can just allocate it as you need to, and it stays on the cloud. Now the nice thing is SARS accepts it, and also a nice thing is cloud is the cloud that Expensify uses, I know, and our app is secure. So the actual expenses will remain on the cloud system for as long as you need it, which is amazing. So the storage you also don't have to worry about, because SARS doesn't require you to provide the actual original if you have a copy of it on cloud, which is amazing. So that means you can keep the copy, you can keep it on cloud, and then you can just kind of get rid of the originals, which is a big bonus. If you're a bit paranoid, obviously you can keep both. But the problem also, if you just rely on the actual slips and you're like, no, I don't have time for technology, slips fades after a while. So even if you did capture it on the system and you file the slip, after about 3 years, the slip will actually fade. And SARS has done a horrid audit where they have raised high tax assessments where people have to pay in high amounts of tax simply because their slips have failed and the proof is gone. That's not a position you want to be in, especially if you have someone or you yourself have done all the admin to keep everything and to file it, and it simply does not work in your favor just because the ink on the slip has faded after X amount of years. So I think it's quite important to utilize the technology you have to make your lives easier. It's much easier than punching a hole in every slip and filing it under month, other expense stuff, by simply taking a photo of it and allocating it and it's done. So sometimes the fact that something seems new doesn't make it ineffective, it just makes it new. So I would highly recommend you do this to ensure that you don't pay too much tax over to SARS and that you effectively adhere to your legal requirement of record keeping. Right, moving on. My tip 3, financial data storage. So I briefly talked about this in the previous slide, where I said that you have to keep the expenses on cloud storage. Now, cloud storage, if you are not familiar with this, there's a lot of different types of cloud storage. For example, all of our clients get free cloud storage because we have a server. But you yourself can actually go and you can get any cloud storage. For example, Dropbox and Google Drive provides free cloud storage up until a certain capacity amount. And the nice thing about that is the fact that the cloud storage does not expire after X amount of years or days or whatever the case may be. It is safe, it's very user friendly, and also it's secure. Just make sure that you use the ones that are secure, that is password protected, that no one else can simply access your information. Um, Data security is becoming quite a big thing. But you know, it's vice versa. Some people tell me, oh no, I rather want to keep it in my safe. But you know, if someone breaks in and they take your safe, or if your house burns down, it's the same risk that you have. Doesn't mean it will ever happen to you. It's just still a risk. Same with cloud storage. Someone tells you, oh no, 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 they can hack my system. It's the same type of risk as someone in South Africa breaking into your house or your house burning down. The same probability for it. So I would say rather keep it on the cloud storage. My reason for that is because of the longevity of it. If in the future you are at a point where you want to step out of your business, because you have to think also the fact that you start a business not just to have it now, but you're building a legacy. Maybe it's a legacy that you want to give to your children, or maybe it's a legacy that you want to hand over to someone else, someone that worked with you for years, or someone that started at the bottom and they're happy and they worked their way up. You're building a legacy. That's the thing about a business. It can survive even if you are not there anymore, which is amazing. So why limit the access to your data? The nice thing about cloud storage is if your laptop breaks today, you can simply go with your phone or with another laptop and you log in. It is web-based, which is amazing, as opposed to keeping scanning everything in and keeping it on your laptop. If your laptop breaks or gets stolen, it is gone. The same type of risk as you face if you keep all the slips in a file. The file gets lost if you move, or you know, it gets chewed up by a dog, or it gets lost in a fire. There's a lot of things that happen, and let me tell you, you'll be quite surprised because we get a lot of clients, and then 1 year or 1 month is missing, and we'll ask them what happened, and they'll just pick up their shoulders and say, I don't know. We thought we had everything. That's the problem. That's why cloud storage is the future. because it limits too many type of variable risks that can occur. And as I mentioned, that is one of the smallest things, smallest changes that you can do that will actually help you not to pay too much tax to source. Because if you don't store everything and mitigate your risk for when SARS asks for it, SARS will actually raise an assessment. It means that SARS will look back and will determine what you are able to verify for them and what not. And whatever you can't verify, SARS will ask for all of those money back that you claimed as deduction. And that's the risk. And that's why I say paying too much tax to source doesn't mean what you're just paying now. Tax has a life of its own. And you can actually come and bite you back even 5 years from now. So that's why you have to ensure that whatever you do now does not just cover you for the now and here, but also covers you for the future. From a tax perspective, SARS is allowed to go back 5 years. If we are dealing with payroll, however, SARS is allowed to go back 25 years. So that's quite a technical thing. A lot of people would say, oh, but they're not allowed to. There's unfortunately quite a technical ruling about that. And if you want to know about it, you can ask me. But up until this point, um, just take my word for it that SARS can go back quite a long time. So make sure that you understand that saving tax is not just about what you submit now, it's about what you have already submitted or what you will submit in the future. You are carrying that tax burden with you as you continue with your business. And something you do 5 years from now and something you have already done can affect you 5 years historically. So if you don't do it correctly, you are essentially not at this moment, but when SARS tells you, you'll have essentially paid too much tax to SARS simply because your record keeping was not up to date. And that is really such a bad thing to go through. And that is actually one of the things most of the people we encounter go through. Something very stupid. Okay, my next tip for you is startup cost for your business. Now, I know some of you have been running for quite a while. Some of you might have already had your business, but there is something I want to discuss because it might mean that you might want to go back to the point where you started, or maybe you're starting now, or you just started recently, or you want to start something new going forward. And I think this is also something that people don't really take into account and think about. And then also this can result in paying too much tax in the end of the day. And this is the startup cost. Now, a lot of times we get clients and simply what they do is they start the business in their own name. Eventually they get someone that tells them a story and they convert it over into a company, or whatever the case may be. But they never realize what happens to all the costs that all the expenses they had before they actually started trading. So, for example, obviously, if you want to open up your own vet business, you need certain capital amount. So you need to have a front desk, you need to have a table for the dog, you need to have a certain amount of products in your shop, etc., etc. So sometimes you don't have that money up front in the business itself. Sometimes you worked for someone, it might be a pension amount that paid out, or it might be money that you have loaned somewhere. So whatever the case may be, whether it's borrowed money or not, you have to know how to treat that when you start the business. And you have two choices. And the choices, again, there's no hard and fast rules, but the choices is something that you have to make. You cannot just leave it and say, whatever the case may be. We have a lot of businesses that have expenses upfront in their own name, and they never bring it into the business, and they're losing out on deductions, and therefore they're paying too much tax to SARS in the end. So let's say, for example, you had certain startup costs when you started your business. You then have one of two choices on how you're bringing in the cost in your own name into the business. You can either bring it in as an equity or liability. Now, if you are like me a few years ago, you would sit and stare at the screen and thinking, you see, those are the types of words that I don't like, and this is why I don't like finance, because people talk about stuff like equity and liability and it just goes over my head. I'm going to break it down. Equity means that you actually bring the money that you have spent. So let's say, for example, you've spent 40,000 Rand in order to set up your new vet clinic. That 40,000, if you decide or you tell your bookkeeper, whomever, to bring it in as equity, it means that you're actually bringing it into the company as a capital amount. Meaning your business is from day one worth at least 40,000 Rand. So if you decide to sell your business in the future, that will actually form part of how we evaluate your company and determine the worth of your company. It means it is equity. So when you go to a bank and you need to apply for additional loan or whatever the case may be, or you want to buy something extra and you want to apply for credit in the business's name, they are going to look at the company's equity. And if you don't have equity or your equity is a zero or in a minus, then they're usually not going to provide you with the actual credit facility because they feel that you are not supplying them with security. So, for example, if you want to buy a house, sometimes the bank might ask you to provide security via either a policy, a life policy, or a savings policy, or something else. Or someone has to sign their own house as surety for your own loan. So that's what equity means. Now, as nice as it sounds, that you might sit there thinking, oh, but that's the obvious route to go. That is the route to go if, number one, you don't worry about cash flow in the beginning, and if, number two, you do have it in your mind that you want to expand in the future and you might need the equity in order to expand. So the second choice is what we call liability. And you might think, this already doesn't sound good to me. Now, liability means we don't bring in the amount as a capital. We bring it in as a liability, meaning if you look at the business's finances, it will show that the business is actually owing money as opposed with sitting with capital in general. So it means that the business is actually in a minus in a certain sense, not from a cash flow perspective, but from a balance sheet perspective. So if your liabilities exceed your equities, when you go to a bank, they will usually not provide you with credit because you're owing too much money, whether it's to yourself or to whomever. You will not be a secure and safe credit application in that sense. So why on earth am I proposing a liability for someone that might want to apply eventually for credit or want to expand? The reason for this absurd thing is the fact that if you start a new business, obviously the last thing on your mind is to expand within a year already. So if you have, for example, that 40,000 Rand that you expended as a startup cost, you want that 40,000 to be paid back to you eventually. You need the 40,000 Rand. You need a salary, you need a way of living, because although you have a business, you still need to survive and to buy groceries, pay your debit orders as the individual. So what you can do is you can actually bring in the 40,000 as a liability, but as a loan from the business back to you. And you can actually then take monthly out of that 40,000 account up until the time that it's depleted. And that is a way to actually then take what we call like a kind of a tax-free salary up until a point where it's depleted, and then you can take a normal salary that has pay as you earn on it. So in the end, after the 40,000 is done, your equity and liability will be 0, then from there going forward. So in the beginning, it's actually a nice way for you to take money out of your business without having an added tax implication. So that's why I say it's quite important to understand something as stupid as startup costs, because you might have been paying too much tax over to SaaS simply because no one told you that you can actually structure your money in such a way from the beginning and actually draw from that in an optimal and tax efficient way. If you have more questions on this, you're welcome to ask me. You'll see we have a special that we're running in the end, which is quite nice for you guys, but I'll tell you when we get there. Tip number 5, understanding taxable income. So I have explained this already. I'm just going to do it in a quick way because there's a few more slides I want to get to just to give you some value and to make you really feel like you can take on the business and take on SaaS and take on the world effectively. So one of the biggest things we've noticed with businesses is obviously the fact that they don't understand elements of the business. Doesn't mean you have to, like I say, do a certificate course or short course in taxation or business management. It just means you have to understand the basics so that you can ask the right questions to whomever helps you with it. You have to check up on the people, so you have to know at least the basics. I myself, as you know, I'm not, for example, a chartered accountant. So when it comes to setting up audited financial statements, I might not know how to do it every step of the way, but I know enough so that I can ask the right questions, and that's what makes a difference. So, understanding taxable income. So you must understand the fact that if you have a business and you've registered it as a separate company, that company is separate from you as an individual. That means all the money that comes into that company is taxed in the name of the company, and the company pays the tax over to SARS. Before you are allowed to take a single cent from that company, the company has to pay tax on everything they earn. Only then can you take money out of the business, but the moment you take money out, there's another tax implication because the money goes then from one separate entity to another, essentially. So the taxes that you pay as an individual, there is a variable ways of how to do it. So the first and easiest one is to establish a payroll, as you would know, and you pay the pay as you earn on it. But that's not the only way. There is different ways, but that's getting into quite a lot of detail. But I want you to understand taxable income in the sense of it is split between the company is separate from you as an individual. Secondly, I want you to understand that the way that we calculate taxable income is by taking all the income received and then deducting certain tax deductions. Now you might say, Carien, but this is easy. We just take income and we less all the expenses. Boom, we have a taxable income amount and we calculate the tax on that. Unfortunately, it's not that easy because we are not allowed to simply deduct just anything. And that's where the loopholes in tax comes in. We cannot just simply deduct an expense because it's a business expense. For example, if you pay certain VAT amounts from your business, or you pay as you earn from your business to SARS, those amounts, even though it's a business expense, we cannot deduct that from the actual calculation. So there's certain exemptions and limitations that you have to know about when you calculate. So sometimes people might ask me, oh, but Carien, you know, I didn't make a profit this month. Why should I pay tax? It just means that from an accounting point of view, you didn't have extra cash in your pocket, meaning everything you earned, you had a place they had to go to. You gave out all the money you earned. But from a tax point of view, it means that even though you've did that, all your expenses is not something we can necessarily deduct. So you might still have to pay tax because you might still have a type of a taxable income, which is still in a way a profit for SARS, even if you in the end don't see it necessarily in your bank account. So take that into account because that is something that a lot of people misunderstand and then they don't budget for possible taxes they have to pay because they don't understand taxable income. And if you don't budget, the problem is you are then caught with your pants down essentially because now you have to pay SARS something and you don't actually have the money to pay them. And the moment you're not able to pay them, it becomes a snowball effect because then SARS wants penalties and then they want interest because you can't pay. And those interest and penalties charge up all your future amounts and then you can't pay your next tax amount, and thus it continues. And it's really an evil circle. So you really have to understand the basics of taxable income to ensure that you're not paying too much tax. And sometimes the too much tax is actually the penalties and interest that comes with it. So just to make sure that you understand the basics. My next tip that I want to discuss with you, and this is the second last one, is understanding VAT essentials. Now, not all of you are registered for VAT, but I just want to tell you that VAT is something that is quite a hot topic with SARS. And there's quite a lot of fraud in VAT, and that's why SARS has such an eagle eye on it to ensure that everything runs smoothly and that everything you submit is on par. So if you are not already registered for VAT, there's one of two choices. You can just look at the slides. It's quite self-explanatory. And I'm not going to go into that too much because it's quite technical. And I really just want to get down to the point of showing you whether you are paying too much to SARS or not. So we have compulsory registration. So that means every month you have to do a test or your bookkeeper or accountant has to do a test where they check whether everything that you have earned for any 12-month period. So this is where the actual trick comes in. A lot of people only look at it once a year saying, for the past 12 months, for this tax year or financial year. No, for any 12-month period. So this means when I look at this month, I have to count back 12 months from this month. And if it seems as if all your taxable supplies, so that means the income you earned from the actual service that you rendered or the product that you sold, if those incomes or that taxable supplies from that income exceeds or will exceed 1 million rand. So what does it mean will exceed? It means that you look at the average and in a month or two, if it still goes as it's going now, it's going to exceed, that means you're already obliged to register for VAT. Or if you already exceeded, you have 21 business days to register for VAT. And that's usually how the compulsory registration works. So you have to make sure that you didn't already fall within that pit and you didn't know about it, because then it means you're going to have to register and backdate the registration, and you're going to have to pay SARS's VAT backdated, which is a mess. You also have a voluntary registration, meaning if you fulfill the requirements as on the slide, you can actually register voluntarily. Why on earth would you want to register voluntarily? For service providers, someone providing service, usually voluntary registration is not all advised because you don't have a lot of expenses. However, if you sell products, meaning you buy a product and then you sell it, the products that you buy has VAT that you pay on it. So it means you have a lot of expenses, and the VAT that you paid on it, you can actually claim that back, having kind of like a net out effect. What you pay, you claim back. So whatever you pay over to source is essentially what you paid here. So it just helps you to actually reduce your expenses in the company, because let's say the dog food that you purchased was 100 rand and it included 15% VAT. So let's say, for argument's sake, it included 15 rand, which will not be the case because then it should have been 115 rand, but nonetheless. So let's say, for example, it was 100 rand for the dog food and that included 15 rand VAT that you had to pay. What happens is if you register voluntarily for VAT, or let's say you compulsory register, it doesn't matter. That 15 rand VAT that you pay, you can actually claim that back from source. So when you sell that product for 200 rand and you have your client pays you the VAT that is included in that 200 rand, that is the VAT that you pay over to source, meaning you don't pay the actual VAT. The client that purchased the dog food, you charge the VAT over and above the price that you want to make on the dog food, over and above the profit. The moment you do that, you pay the VAT amount over to source, but you can deduct and reduce that VAT amount by the input VAT that you've claimed. So essentially, if you look at it this way, if you were not registered for VAT, you would have not actually received the benefit of claiming back the VAT that you've paid when you purchased the product. So you are paying more to source than what a lot of people will then tell me, yeah, but Carien, you still have to pay the VAT on everything you sell. No, it's not you that have to pay the VAT, it's your client. It is the consumer that pays the VAT because you charge a VAT over and above the profit price that you want to make, so over and above the net amount. So if you want to charge 180 rand for the dog food, the VAT has to be on top of that. The moment that you include VAT into your price, you will take a knock, and that's not the purpose of VAT. VAT is on top of a value add over and above. Okay, so I hope this makes sense. I'm just going to talk a bit more about VAT because, as you can see, VAT is used as quite a good way in structuring your business. So in certain instances, VAT can be used as a tool to reduce business expenses and reduce the amount of tax you have to pay to source overall. It just depends on your business, and as I said, your business is like a fingerprint. It is completely unique. So quite important to understand or to know that who you have helping you with your finances, that they understand all of this and that they are able to provide you with some valuable structuring feedback on how to structure your business effectively. So VAT, just to explain what VAT is, as I said, it's 15% over and above your asking price. You also get what we call 0%, zero VAT, and we have exempt VAT. 0% VAT, what's the difference between 0% and exempt? It sounds ridiculous, but the difference is 0% means that you can still claim input VAT, so meaning you can still claim VAT from any purchases you made in order to provide your product or service. But when you sell it, you don't charge VAT. And now your first question is, what do I have to do not to charge VAT? There's a few instances, but for example, the most common one is when you actually export either services or goods directly out of the country. Usually you don't charge VAT on it, and you can claim all the VAT that you've paid in order to do that service or product. So what's the difference between that and exempt? Exempt means you don't pay VAT and you also don't claim VAT. For example, you would have seen when the VAT rate went up from 14% to 15%, there were so many articles in the news and on the radio about people that said that they have to be more exempt um, uh, VAT food suppliers, etc. So, for example, brown bread and maize and stuff like that, which is regarded as essentials, are exempt from VAT. So, let's say Checkers or Woolworths sells you a brown bread, which is then usually cheaper, they will actually not charge any VAT on it. So you'll see on your slip, VAT is charged for every single thing except for those things. And also Woolworths or Checkers, whoever, can't claim back any VAT that was charged when they purchased the bread from the supplier. And that's just how exempt works. It means that there should be no effect of VAT regardless of whether you are VAT registered or not. So there is a list of certain things that are exempt, but it's mostly essentials like bread and milk, etc. Moving on. So just to, and this is what I simply explained now in simple terms, to explain how that works, because if you don't understand it, then that is, as I said, where you can actually have a pitfall and you can pay too much to start, and you can actually end up in a position where you do your business, injustice by not actually knowing what you should pay and you're paying too much. So let's take an example. Let's say you have a shop and you want to sell cool drink in your shop. So you, as the shop owner, go to Macro to purchase the cool drink. And then you actually sell that cool drink to a customer. Now, Macro, the moment you purchase the cool drink from Macro, Macro will charge you VAT on the cool drink. The VAT you pay on the cool drink, you claim back from SARS as input VAT. That's what we refer it to. And then the moment that, but essentially, that's what Macro will also do. When Macro purchased the cool drink, Macro claims input VAT. And then when you purchase it from Macro, you pay VAT on the slip, as we mentioned. And you then claim back the VAT that you've paid to Macro, that output VAT, but then you charge your own VAT to the client. So who is the person that actually ends up paying the VAT? Is the person in the end, the consumer, the client. That is why things are so expensive, because as you can see, there's VAT on top of VAT everywhere as far as we go, from the manufacturer all the way to the supplier, to the person that owns the shop, and in the end, the consumer pays all the bits and pieces of that on top of profit that everyone wants to make. So where the cool drink actually costs R3 to make, the consumer in the end will pay R20 for it. And that's how the economy works and consumerism works. And that's just to give you an idea of the VAT itself. And how we calculate that, as I mentioned, is you take the amount and you add the 15% on top of your asking amount. Please do not, if you want to, if you usually ask R100 and you now have to register for VAT, please do not keep the price at R100 and incorporate the VAT. People will understand, because VAT is over and above. This is a complete understood notion in the industry, in South Africa, in the world. And you really do yourself in, because you are then cutting your own profit margin by 15% if you absorb it in your selling price. So please remember, it's important, unless you control your money, making more won't help. You'll just have a bigger payment. So that, I think, is essentially kind of a nutshell, is It doesn't help that you do and you struggle and hustle and do everything you can just to make more money, but you still don't know how to control it or how to manage it or ask the right questions to the people controlling or managing it. Because in the end, that will not solve it. That won't actually help at all. It will just make whatever you have to pay to whomever just bigger. Okay. So when you pay VAT, when your client has to pay, you have to issue them with an invoice. And what I mentioned previously, you have to keep invoices and slips. That is a non-negotiable. So what we chatted about earlier with the storage and expense app is a non-negotiable when it comes to VAT. And it's usually advised to have an accounting program. Don't be fooled. There might be a lot of expensive accounting programs out there. Believe you me, there is a lot of cheap programs out there as well, which is better sometimes than the actual expensive accounts. For example, we have a accounting software that we sell to clients and that we use ourselves as well, and we use it for all our international clients as well, because of the fact that it's so good and so versatile, so user friendly, and it incorporates with almost all the, well, it incorporates with all the banks, and it is also on mobile, and it really is at the forefront. And that accounting program starts at only 200 Rand. So there is really a lot of ways to go about it. And it's not necessary to pay 1,000 Rand or even 300, 400 Rand a month. You can save, as I said, with critical mass, you can save on that type of expense. Okay. So just lastly, paying that over to SARS. This is just to bind it all in terms of that, because it is such a big thing that people can use structure to make sure they're not paying too much tax. And this is also one of the biggest risks because people don't know how to handle it. Um, so VAT returns, it depends on how you were registered. SARS chooses how they register you. They can either ask you to submit a return every month, or every second month, or once a year, or twice a year, and you have to file it by the 25th. Now, even though I say they're the last business day, SARS still in their legislation states it's the last business day, but the systems of SARS unfortunately went through a bit of an upgrade, and part of the upgrade was that the system automatically issues penalties and interest if you don't submit the return and pay the return before the 25th of the month. We have raised this numerous of times in the industry board sessions with SARS, and it still hasn't been corrected. You have to then just apply for the interest and penalties to be waived afterwards. So it's quite bizarre, but something that you want to have a look at. And if someone does your books for you, please ask them for a statement of account. So the statement of account is what you can ask for each and every tax type. You can ask it for the income tax, you can ask it for VAT, and you can ask it for pay as you earn. And that statement of account will show you interest or penalties, any late submissions, late payments, and whether you owe anything to SARS. Don't just rely on the person doing it and see and think, oh, they will check it. It's not necessarily. They have a lot of clients that might not have any compliance procedures in place to check it. So make sure that you ask the question because it is your livelihood. And if you do it in time, you can still request SARS to waive it. But if you just leave it and it goes on for months and years, eventually you get to a point where you're not allowed to ask SARS to waive it anymore. And then you have to pay it even though it was not reasonable and it was a system error. So please take that into account and don't pay too much over to SARS. As I mentioned, the penalties and interest levied on it. Okay, then the last tip. And I think this is something that I have reiterated on over and over and over again as I go through all the slides, is to check up on whoever you are using check up on your account and bookkeeper. Just have minimal amount of information so that you know what questions to ask. As I said to you, I don't want to put in the statistics, but it is the reality that 70 to 80% of small medium enterprises fail within 5 years. But that's not the important part, because it doesn't mean that we will fail. The important part is why they fail. So that means we can use what they didn't learn from. So we can learn from them and we can use that to our advantage. So the reason why most of them fail, according to Prof. Friedrich, is because of the fact that they did not learn, they did not innovate, they did not know about the business. It doesn't mean you have to have a master's in business administration, a degree, or a short course or anything like that. It means that you just have to find out the basics of running a business, and you have to ask the right question. According to Benjamin Franklin, an investment in knowledge always pays the best interest. And I cannot reiterate that enough. If there's ever anything I want to leave you with in terms of ensuring that you're not paying too much tax to SARS, it is to gain knowledge. You can never know if you don't ask, if you don't find out. If you simply focus on your core function of your business, you're going to realize that it doesn't matter how great of a vet business you're running, how great of a service you're providing, that is not the only recipe that will make a successful business. If you don't manage your finances correctly, if you're paying too much, if you are ignoring the 1 or 2 rand that goes out of your account without you knowing what it is for, in the end of the day, that is what is the downfall. Not the actual service or the core function, but the actual management of the business and the finance portion of it. Eventually, we determine whether a business is successful by whether it makes money or not. So if you don't know how to manage or control the money your business makes, how can it ever be successful? So how can we help you? So these are type of my closure slides. You know who I am, you know my business. So this is just to tell you of some of the ways we can help you. Before I go on to telling you the packages we have, I just want to tell you that all Vet Summit attendees can claim free 1 hour online consult session with myself and some of the consultants here. And the key word for that is Vet 2019. So essentially, we schedule an online meeting, and then you can actually ask us for questions. And we, in that hour, we look at whatever you provide us, and then we advise, and either you can take it, or you, whatever the case may be, you can continue after that. But I think it is quite valuable to have that 1 hour, and sometimes we've seen that it ends up in you actually choosing or making one of the best decisions in terms of managing your company. Now, just to let you know, we have a lot of packages in the video that I've played you earlier on. Our most famous package is the pay as you trade. It starts from a certain amount, and then you only pay as you trade. So if you don't have activities in a month, it remains stagnant, and it doesn't, the price doesn't grow anything. So it means we indirectly invest in your company. So if your company has a slow or bad month, we feel that slow and bad month with you. And that also essentially means that we do all we can to help you to improve, because the more we help you, obviously the more we help ourselves. But we have a lot of smaller businesses. So we have a lot of SME packages as well, where some of the businesses want to do their own bookkeeping to save money, and we then help them with all the technical stuff. And those packages are extremely competitive, and this is also why we won some of our awards. Starts from 695 Rand per month, And the most basic package like this will include your accounting specialist. We do the tax calculations, we do the submissions to SARS. The nice thing here is we do the monthly compliance checks. So we actually have a ticketing system. And in that, every month, we do a check to make sure that everything, all your statement of accounts and everything is clean, because SARS can do things on the system in an unexplained manner. So if you don't keep an eye on it, you cannot actually go and take them on. We also do, which I think is the biggest value add out of everything, and the reason why our clients love us is because of the monthly tax estimations we do. So on a monthly basis, we actually take what you have done up until that date for the financial year, and then we calculate, we do a very detailed calculation to determine what we think your tax will be at the next due date. And then we tell you every month what amount you have to save for. So we help you to budget, because most of the clients, when they come to us, the reason they come to us is because the accountants didn't communicate with them and they didn't tell them what they should save up front. Meaning the accountants actually just told them, listen, it's now February, you have to pay 2,000 Rand to SARS. You didn't budget that 2,000. So this is a kind of like a monthly communication, which I think is amazing. It also includes the accounting software, plus the mobile expense tracker. It can be mobile or on your laptop, you can do it either way. And also it includes the cloud storage license fee. That is the basic smallest package that we have, includes all of that. So I hope that you guys can see some of the value in that, but obviously more than that is I hope that you guys will actually have value in terms of this presentation, because that's the most important part. The most important part is to know exactly what you have to do, what you have to avoid, and what measures you have to take. We're going to go to the question section. I just want to put up on the screen any of our contact details that you can take down. Obviously, if you want to use the free 1-hour session, you just drop me an email, or you can also just phone and you can claim your 1 hour, and then we schedule the online session accordingly. Thank you very much.